Good afternoon, ladies and gentlemen. Thank you for joining us for what is the next installment in the Admiral Markets Trading Spotlight webinar series. And we are here today to talk about, is the Swiss franc still a safe haven currency? An interesting topic, gives us lots to discuss in our session today. As always, we appreciate that, it's been rather interesting times, ladies and gentlemen, and we here at Admiral Markets hope that wherever you are in the world, I hope that you're safe, okay, and that you and your family are all okay. And we appreciate you coming to join us for our session today to help you engage and develop and move forward in your own trading journey. But as I said, we're going to talk about, is the Swiss franc still a safe haven currency? Fascinating to know what your views on that. Maybe you're an active trader of the Swiss franc. Maybe you're completely new to FX trading. Either way, it'd be fantastic if you could just drop in the chat box what you think. Or if you're watching this later on the Admiral Markets YouTube channel, then if you find the video useful, please give us a like. Or if you've got questions or comments or thoughts about future topics, please pop them in the sort of suggestions and comments box. We always make sure to watch them. We always make sure that we will sort of respond. We really do enjoy engaging with our audience. So what are we going to talk about today? What am I going to focus on for our session here? Well, I'm going to sort of look at this question of, during these tumultuous times, do we still need safe haven currencies? Are they actually still valid? Is there still a requirement for them? You might have a view on that. If you do, put it in the chat box. We'll also sort of quickly have a quick look at, what actually makes for a safe haven. I appreciate that, we have a wide range of experience, people who join us or watch our videos, from complete beginners to people who've been trading for decades. Okay, so we appreciate there's lots of new beginners trying to understand and might actually not understand what actually makes a safe haven. So we'll very quickly touch upon that. If you want to know more about safe havens, well, actually, we did a video on the Trading Spotlight webinar series just a few weeks back, and you should be able to find that on the Admiral Markets YouTube channel. And we'll talk about also, what makes the CHF a safe haven, right? What is it that kind of gets people interested about the Swiss franc? For those who don't know me, my name's Paul. I've traded for many years. Okay, I've traded for funds and also for high net worth clients, and also coached hundreds of traders over the last 10 years or so. Primarily, I look to focus on FX indices and commodities for my own traders, and I like to be a trend trader for sort of longer term swing trades and a mean reversal trader for intraday trading. And of course, today here, we are Admiral Markets, and as you can see, they provide a wide range of financial instruments that you can engage with. They provide, they are sort of offices across the world, and they are licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and allowing you to engage with markets through either MT4 or MT5. Should you actually wish to know more about Admiral Markets, then get in touch with your account representative, and they'll be very happy to help you. But today, ladies and gentlemen, let's talk about our main topic. Is the CHF still a safe haven currency? What do you think, ladies and gentlemen? Do you think it is? You can just put in yes or no. That's equally fine. We just want to understand what people's views are, or what they might have in terms of a perception of the Swiss franc. As it says there, we recently provided a webinar on safe havens and why people are interested in them during these volatile times. And you will find that webinar is on the Admiral Markets YouTube channel, so be sure to sort of check that out. However, many people are interested in one particular safe haven currency, namely the Swiss franc. So the question is it still a safe haven? If so, why? And what is it that makes it so special? So in this session, we'll look at the Swiss franc in particular and discuss whether it is still a safe haven. So, Philip says, he never thought a safe haven, Swiss franc in those terms. Oprah says, yes, it is. Thank you. Appreciate that. And what we'll do is we'll discuss that as we go through the remainder of the session. So, as I said, let's just have a quick recap on what actually is a safe haven. As I said, I appreciate we have complete beginners to very experienced traders in joining us for our sessions. Well, generally, a safe haven is deemed to be an investment that is expected to retain or increase in value during times of turbulence. So that traders and investors, they seek them out to limit their exposure to possible losses when markets turn downwards. However, there are plenty of safe havens, and it's important to understand context. To markets, context is always key. Therefore, traders and investors must complete their due diligence. And that doesn't really matter whether you are a beginning retail trader trading on your laptop in your bedroom, or whether you're a super major hedge fund manager, okay, or trader at an major institution. Traders, investors, they always have to complete your own due diligence, okay? It's all about the understanding the context within which that possible safe haven may be used. What you can say and what you can see, and what I've seen from my own experience, trading at institutions, is that when markets and life start getting, let's say, just a little bit tetchy, they get a little bit. People start to get a little bit nervous. People get a little bit uncertain. Markets are volatile. Well, what you will find is that big major funds, major trading houses, they are ideally they would like to be able to increase in value during those times, but what they are very much deemed upon is that they don't wish to lose anymore. They wish to mitigate their losses as much as possible, and one of the ways they do that is by actually sort of moving their money into a particular safe haven. And there are quite a wide range of them. And, as I said, if you go and look at the safe haven webinar that we did just a few weeks back, what you'll see is that you'll give you a bit more insight into the various different types of safe havens. And as I said, it is about context. So, a safe haven, it's like a safe harbor there. That's what you can do. And a safe haven helps because it helps an investor to diversify their portfolio. As I was just saying there a few minutes ago, okay? It's, if volatility is rife, people are uncertain, people are fearful, well, then invariably what they want to do is have move their funds to a place where they can sort of keep themselves relatively safe. So not surprisingly, that's beneficial in times of market volatility. And, it might be said that, this is 2020. We have had quite a good deal of market volatility so far in 2020. Okay. And undoubtedly, we will have more for the remainder of this year. We've got the major US elections happening in a few weeks' time. That will have its own impact upon elements of volatility. And that will have an impact upon traders and investors' behaviors. During a severe market downturn, like an economic recession, provides a safe harbor, right? And that's, as I said, that's what it is. It's if like a good sailor, if it's stormy out, a good sailor will actually go and sort of tuck themselves away in a safe harbor, and that's a bit like what traders and investors are doing. Okay, if those markets are choppy, okay, they're volatile, uncertain, well, then invariably traders and investors want to be able to basically hold their capital in a place that basically provides them with a bit of a safe harbor. So a safe haven offers protection from market downswings. All right, and that's what we're really looking at, and we will talk more about that. Okay, what we said, we'll look and switch across and move to the charts at the end of the session. So stay with us to be able to go that, but we'll be able to show you how that actually looks like when we see that in real time in the markets. So we've just talked a little bit about, what is a safe haven? Why do traders, investors use safe havens? But why do they particularly take an interest in using currencies as a safe haven? What is it that makes currencies better than something else like government bonds, or something else like precious metals like silver or gold, etc.? Why is it that currencies are of interest and of use to traders and investors who need a safe haven? Well, safe haven currencies are popular because they're liquid markets. Okay, still remember that FX market is still by scale the largest markets in the world. Okay, so they are big enough that even governments, okay, major governments can in fact actually sort of operate within them. Okay, they are huge liquid markets. They tend not to have a correlation with the performance of stocks and bonds. Now, there are there are rare occasions where they do, but as a general rule of thumb for, let's say, the new traders watching here today, they tend not to have that correlation. Okay. Remember what we're looking to do, we just looked on the slide before, is that you want a way to basically diversify your portfolio. So, if you have lots of money in stocks and bonds, well, being able to use some currencies as a safe haven helps you to basically diversify and not be on the wrong side of any particular correlations. And currencies are difficult to manipulate for any length of time. That's not to say they don't, and that's not to say that governments and let's say state actors, don't try to and sometimes have success, but it's not something they can do forever. And we're going to look at a particular example of that in a few slides' time. So we've looked at what safe haven is. We've looked at why a safe haven. We've looked at why the currencies. Well, let's have a look at why the Swiss franc is deemed a safe haven, why it has been, okay, up until now. Well, so what we have with the Swiss franc is the CHF, the Swiss franc, is considered a safe haven currency due to the stability of the Swiss government, the financial system for various reasons, and also as a country it has low unemployment and a high standard of living. And they also generally have positive trade balance figures. And it has been deemed, and it still is, one of the major tax havens of the world. So, that is many of the reasons why the Swiss franc is deemed a safe haven, okay? The Swiss government, okay, the stability of it, they are they are not a poor government because they have low unemployment, high standard of living. They also have, great tax take. So, the actual government is quite stable. And as a general rule, they are as the way the political system is set up is that they are actually quite frugal. They don't look to basically be prolificate with their spending. They don't look to basically to try and affect change around the world in the sense that they don't have a great military. They're not interested in projecting power around the world. They are invariably just about looking after themselves and making sure that they themselves are safe. The financial system, as I said, is actually helps. All right, it's for the most part, it is transparent and it is also opaque, depending upon which part of the financial system that you are operating in. But historically, Switzerland was always seen as the kind of tax haven where people could actually put their money. So the kind of the banking system was awash with all types of currency and treasure. Now that has changed and that is changing as we go. But nevertheless, it is still cleared to be still deemed to be a tax haven and a financial system which basically still looks to sort of help entrepreneurs and big businesses. So, then we have to look at, well, all right, well, what are we interested in Swiss franc? So what I have here is, for all of the major currencies, I have a profile set up, and this is an MT4, but it could be an MT5, and it could be in any particular trading charting package that you care to use. But what I do is, I have a Swiss franc profile here, and hopefully you can just see here it's just against the major currencies here. So let's just push around here. What we've got here, as you can see, is up on my top left here, as I have the dollar against the Swiss franc. Then I have the euro against the Swiss franc. Then I have the CAD against the Swiss franc. And then I have the Aussie dollar against the Swiss franc. And then on the bottom, we have the Swiss franc against the Japanese yen, the pound against the Swiss franc, the New Zealand dollar against the Swiss franc, and then gold as well, okay, which is a player in the elements of why Swiss franc is a safe haven. But what we're looking at is, how does the Swiss franc basically operate against those particular currencies? And what we've certainly seen, certainly in the last 10, 12 years of my trading career, is that as the Swiss franc, along with the Japanese yen, were deemed to be safe haven currencies. Well, what we saw is, after the financial crash of sort of 2008, and we saw quantitative easing coming into the markets. What we really did see was and understand was the market's view on risk. And effectively, when markets were pulling up out of the kind of recession of the 2008 crash, and risk was deemed to be on, well, then invariably what you would see is that money would flow towards those risk on currencies. Things like the euro against also the sterling, also many of the Comdol currencies. On the flip side of that, whenever markets got nervous, and whenever markets start to feel that uncertainty or volatility, well, then invariably, we would go into what would be deemed a risk-off environment, and you'd see money would flow towards the Japanese yen and the Swiss franc. The Swiss franc, is deemed to be a safe haven currency, and in particular one that effectively is liked, is utilized when markets move into a risk-off environment. And we're going to have a look at that in the live charts there at the moment, because I said in a few slides ago, a lot of it is about context, and that's actually what we're going to be sort of looking at and taking on board and understanding the kind of context when and where we start to see the Swiss franc be actually used. So, here's an interesting chart here, and this is a chart. This is a weekly chart from. Let's bring up the drawing tools here. This is basically a weekly chart here of the Swiss franc against the Japanese yen, and it's a weekly chart. And for those of you who joined me before, my charts are normally pretty simple: green bullish candles, red bearish candles, blue 20-period moving average, a red 50-period moving average, and a green 200-period moving average. And what is kind of interesting to me here is that, as I said, the Swiss franc and the Japanese yen are normally deemed to be risk-off currencies. But what we saw this year was, if I just look here, this was around about the kind of the period of the what we call it, the COVID crash. As COVID sort of spread throughout the world, markets finally sort of caught on. Market started to tumble, and so as we saw money flowing into the Swiss franc, but in particular at the start the Japanese yen. And actually we can see here through sort of March and April, May rather, we actually saw the Swiss franc go down against Japanese yen. That means that, of those two safe haven currencies, more money was flowing into Japanese yen than Swiss franc. But that actually turned around here, and from May up to the start of September, what we actually saw was we actually saw the Swiss franc rising against the Japanese yen. We saw, both of them were strong currencies, but there was a real impact that, money was flowing into Swiss franc. People were buying gold, which we'll look at in a moment as well. But it's a case of working out. You can look at the Swiss franc against the Japanese yen chart to understand. If that market is going kind of sideways for a while, well, then that's an indication that both the Swiss franc and the Japanese yen are quite they're in fair value, and that might be deemed to be because markets are a little bit uncertain and money is passing into them. But also equally, as we can see there, when we're seeing the Swiss franc, strengthening against the Japanese yen, that's a real story that invariably we're seeing, Swiss franc strength, that risk off sentiment, that risk off mentality pervading through market players' major decisions. So, what are points that we need to be aware of about the Swiss franc? Well, when it comes to the Swiss franc, one of the elements that makes the Swiss franc a safe haven is the SNB, the Swiss National Bank, one of the major central banks of the world, up there with the Federal Reserve, the ECB, the Bank of England, the Bank of Japan, etc. However, they do not like seeing the Swiss franc getting too strong. Remember, we said a few slides back that actually, the Swiss have a positive trade balance for the most part, and part of that is to do with about them being very keen, on being able to export their products, and I'm sure you can all think of various things that the Swiss like to export, so Toblerones to Swiss Army knives, okay, and a whole host more there, okay. I'm sure you can think of many various different elements, in terms of products and services that the Swiss would like to export. But with that in mind, the Swiss National Bank don't like the Swiss franc getting too strong. So just think about that. When risk and uncertainty, okay, is pervading the market, and people are plowing money into the Swiss franc because they want a safe haven, well, that makes the Swiss franc, much stronger as a currency, which means that it affects Swiss franc exports, because invariably they're now more expensive for other people around the world to buy. Swiss National Bank don't like doing that, or they don't like seeing that. And very often, as we've seen over the last 10 years or so, they will happily get involved when it starts to get to levels that they are uncomfortable with. So the Swiss National Bank, they are happy to intervene in the Swiss franc itself. Sometimes by giving, let's call it like an element of forward guidance to markets. Other times just directly, okay, into the market. And we will look at a couple of examples of that in a moment, ladies and gentlemen. And well, not unsurprisingly, if you're on the wrong side of that Swiss National Bank intervention, well, then that can be very painful. And there might be people here joining us today who've had particular examples of being on the wrong side of that. And if you have, or if you've experienced a couple of the major elements of that, well, then I would love to hear about it. Okay, either here in the chat box or in the commentary box if you're watching this on later on demand on YouTube. So here's once again, here's a chart of this is the dollar against the US dollar against the Swiss franc, and we're talking about sort of Swiss National Bank interventions. So as I said, this is a weekly chart, and actually we're going back here sort of 2009, 2010. And what we saw here was, we saw a kind of a top here in the US dollar against the Swiss franc. And then we had about it was about a 10 to 12 month period here where invariably the Swiss franc was very, very strong and strengthened greatly against all of the major currencies. And it was it was a fine time to be an FX trader, ladies and gentlemen, especially if you were basically buying the Swiss franc and then effectively selling pretty much all of the major currencies. If you look back at the charts there, you literally just had to buy the Swiss franc and sell the US dollar, sell the euro, sell sterling, etc. And you could actually trade very, very handsomely and very, very well. But with all of that happening, what we saw was, that as you can see there, from the kind of the tops here on the dollar against the Swiss franc, okay, up where we were around about 118.40, down to about 71.60 on the one of the days. We had actually the Swiss franc was just strengthening enormously. That was having an impact upon Swiss exports. That was basically, of course, came to be of interest to the SNB, and then invariably the SNB basically started to intervene in markets. So they wanted to weaken the Swiss franc. Okay, so invariably they were being major sellers of Swiss francs to effectively to weaken that and trying to use that money to sell to buy other countries' currencies to basically effectively make them stronger and the Swiss franc weaker. Now, that went on for a very while, and the Swiss National Bank were quite opaque about it in the sense that trying to get a real measure and understanding, okay, of how much they were actually spending to try and weaken the Swiss franc. Well, you can sort of pull your numbers out. I think we've had numbers from 1.5 trillion plus, okay. But what we saw was that once the Swiss bank came out and said that they were going to intervene, well, you can see that, what actually happened is that we bounced back quite strongly. We bounced back strongly. We really effectively saw, okay, Swiss franc really weaken against the major currencies. And then really for the next couple of years, every time the Swiss franc started to get stronger, the bank would intervene, and effectively it would push the price in the direction they wanted to. However, what we were seeing was that invariably that was actually costing the Swiss National Bank a great deal of money, and really, it was just almost like a come on to major institutions and hedge funds, banks. They started to pile in and started to test the kind of willpower of the Swiss National Bank. And for what we saw was here, and this was kind of early in 2015, you might be able to see that sort of candle there, is that effectively the Swiss National Bank one morning just come out and said, nope, we are no longer suppressing the Swiss franc. We're no longer supporting it in that sense. And what we saw was that a collapse. Okay, a collapse in those prices. And we're going to look at it in a bit more detail in the next slide or two. So, that was quite a traumatic day for a lot of people, for a lot of, very experienced FX traders. That was the biggest move they'd seen in 10, 15, 20, 30 years of trading when the Swiss National Bank basically pulled the rug out from underneath their operations. And that, as I said, is just it's an example of how the Swiss National Bank, they have a mandate. They're looking to follow that. Okay, and when the Swiss franc gets too strong, well, then you start to get worried about whether there'll be interventions by the actual Swiss National Bank. So Opera and Kibri's asked a couple of questions there. What we'll do is we'll come to them in a moment if you're okay. I'll just explain this to give you some context, and then I'll happily sort of answer your questions there. So based upon what we talked about there, well, this was what was happening on the euro against the Swiss franc here. So this was the euro against the Swiss franc, but now we're looking at the monthly chart here, okay? And hopefully what you can see is here, kind of into 2007, we peaked here. And then effectively we had, what was really about a 3 or 4 year run there, okay, where we just saw the euro, okay, where we saw the euro weakening against the Swiss franc. Remember, as the chart's going down, that means the euro is weakening and the Swiss franc is strengthening. As I said, I traded during that period myself, and it was quite literally just a simple job of effectively buying the Swiss franc and selling pretty much all of the other major currencies. You didn't need to be a rocket scientist. You were just literally, there was a huge, let's call it a huge super trend in place, and invariably that's what happened, and we followed it down. And this is what happened, as I said, till that time, kind of 2010, when the Swiss National Bank stepped in. And in particular, what they did was they pegged the euro, okay, to the Swiss franc to the 120 price, okay? They pegged it there at 120, and basically every time price came down to it, it bounced off it, okay? You get sort of not great moves there, but you can see every time it came down, it bounced. And actually lots of traders, okay, lots of private traders just traded that, okay? They would simply have their trading account with a standard order at 120, basically to effectively buy the euro Swiss franc, because invariably they knew the Swiss National Bank would step in at 120 and they would start selling Swiss francs and buying euros to try and keep to try and raise the price. And as we discussed, they did that for about 3 years or so, okay? 3.5 years, but they just couldn't keep it up, all right? They just couldn't keep it up. Nothing ever lasts forever. And they just announced in sort of early time that they were pulling the plug on that, and bosh, you can see there, okay, we had that absolute drop. And, and I remember that day quite vividly myself. Thankfully, I was on the other side of that. But, there were lots of people who were on the wrong side of that, okay? Lots of people who are on the wrong side of that, indeed, okay? And it's just an example for you to take on board that, trying to sort of predict or fight the Swiss National Bank is normally not a smart move, okay, for private traders. But interestingly, what we saw is that here against the euro against Swiss franc, having dropped down and collapsed and then settled around about the 105 area, well, then actually what we saw was price sort of drifted its way back over the next few years up to 120. And as is a very an old trading adage of support becoming resistance becoming support, that 120 level of support suddenly became resistance here, and then actually price drifted down. And then what we've seen over a lot of this year, especially early this year, was price drifting down towards the 105 area, which the Swiss National Bank had once again sort of suggested that they would take as a line in the sand to basically to defend, to stop the Swiss franc getting stronger. Remember what we were saying, during a time of the COVID crash, people were going into a risk-off mentality. Risk-off mentality meant money was flowing into the Japanese yen and the Swiss franc. And so we can see that price so far has bounced off there. But, if I was a trader, I would be keeping an eye on, whenever price drifts down to that 105 level, then I would be keeping an eye on there, because there's likely to be some sort of movement when price gets into that zone. So, ladies and gentlemen, in conclusion, during these tumultuous times, do traders and investors still need a new safe havens? Yes. Okay. The answer is most definitely yes, and we can see that just from the flow of money. And one of those safe havens remains the Swiss franc. A lot of that is due to the stability of its government, the viability of the Swiss financial system, and the fact that it also has low unemployment and high standards of living. It is also still a tax haven, which means money flows to it. There's also good economic data. However, be aware that the Swiss National Bank will actively intervene in the Swiss franc when they believe it's becoming too strong, okay? Because when it becomes too strong, it has an effect upon Swiss exports. So why don't we have a little take a look at live markets now to see what the kind of the Swiss franc is doing, and we're just to try and understand what we how we put into context what we've just discussed there, and then I'll also give a chance to answer the questions from Opera and Kibri as well. So before we do that, as always, we appreciate that trading at home on your own can be a little bit of a lonesome endeavor. That's why we created the exclusive Trading Spotlight community on Traders Yard. Come and join us. I'm going to be there for the remainder of the afternoon. So if you've got questions about what we've discussed here or other trading questions, please come in. You're very welcome to join us. You can join us at tradersyard.com/group/312, and you can see my trading colleagues, Marcus and Jens, who post some excellent stuff there on a daily basis. And don't forget to join us next time on Trading Spotlight, where if you join us on Wednesday, my colleague Marcus is going to talk about what is the pivot point indicator and how to use it, including what is the pivot point, how is it calculated, interpreting and using pivot points, and the bottom line. That will be on at 2 o'clock on Wednesday, 21st of October. Check your inbox for the webinar link, or you can head over to the Admiral Markets website and be able to register that for the live webinars. And as you'll find on the admiralmarkets.com website, you'll find a whole host of analysis, education, and resources that you can actually make use of. And if you want to contact us, you can do email global@admiralmarkets.com. Be able to find us youtube.com/admiralmarkets, where you'll be able to watch this video on demand, and also facebook.com/admiralmarketsglobal. So I hope you found that useful, Leisure. I hope it's just get a little bit more insight into the Swiss franc and as to why it's used as a safe haven, and also what you have to be aware of when you're operating and trading within this with the Swiss franc and against the Swiss National Bank. So if you'll just bear with me, what we'll do is we'll switch across for the last 5 minutes ago. We'll switch across to the live charts and take a look at live markets. Just bear with me a moment, and we'll switch across. So there you go, ladies and gentlemen. Hopefully you can still hear me. Hopefully you can still see me. Hopefully you can actually see my screen, which is basically the Admiral Markets MT4 platform here. And as I said and showed you a little bit of before, this is a Swiss franc profile. Okay, so what I have is I have a profile for all of the major currencies that you can see here. Okay, so what it does, it allows me to take a look at that currency, in this particular case the Swiss franc, and see how it sets itself out and how it's trending against all of the other major the major FX pairs. So just all of this is just on the weekly. So as I said, just quickly, just to help those new to trading. So I've got here the dollar against the Swiss franc. Then I have the euro against the Swiss franc. Here, the CAD against the Swiss franc, the Aussie dollar against the Swiss franc, and down here in the bottom, the Swiss franc against the Japanese yen, which we looked at before, the pound against the Swiss franc, the Kiwi against the Swiss franc, and gold against gold really, because gold is effectively is very closely linked with the Swiss franc. So, which was one of the particular questions of that who asked for it? I think it was Kibria. Yeah, Kibria. Thank you for that. So, so we can have a look at here and let's have a little look at Swiss franc, or rather gold here. So gold weekly is very closely associated with the Swiss franc. Okay, Switzerland holds very strong good reserves of gold bullion, so effectively their financial system is underpinned by gold. So whenever we see a flood into risk off, one of those elements could be to buy Swiss franc, but also one of those elements could be to buy gold as well. So that invariably that just adds to the kind of the strength and the kind of the story about the Swiss franc being a safe haven, and reasons why money will flood and float into it. And if we look at that, we can see that actually gold really for the last couple of years, okay, has actually been in just up until the last month or two was in a great uptrend there, which we could see. And then that actually has a look on when we look at things like here. Okay, this is the dollar against the Swiss franc. So when we looked at that, here we go. Let's just pull this here. What I said is we just looked at how gold effectively had basically increased in price. Okay, and remember, gold is priced in dollars, and at the same time, as I said, we've also had a great run down there in the dollar against the Swiss franc. So remember, gold is priced in dollars. We've had dollars getting weaker, we've had gold getting stronger, and also the Swiss franc getting stronger. So, you can basically look at that kind of between them in terms of, the dollar Swiss franc, okay, and the gold, and look at the kind of correlations between those, okay. And that's kind of a bit of a clear example that we've seen there for the last sort of 2 years or 18 months, 2 years or so, okay. So it's that might be, if you're trading gold, you might want to also keep an eye on the price of dollar against the Swiss franc, and just as a general understanding and a view of the Swiss franc in itself. I hope that helps you, Kibri. And we had another question here. Was Opera asked, in your opinion, what is better to trade? Dollar, Swiss franc, Swiss yen, euro, Swiss franc? We talk about Swiss franc currency. What is the correlation between Swiss franc gold? Hopefully we just cover that, and what you trade many times, okay, in terms of referring to the Swiss currency. All right, thank you, Opera. So, you talked there about which one is the better trade: dollar against Swiss franc, Swiss franc against Japanese yen, and euro against the Swiss franc. Well, what you can look at here, it's a great question there, is remember, Swiss franc against the Japanese yen, we talked about that earlier. What that a lot will be to do with about the kind of the risk environment that we find ourselves in. So, if we are in a very risk-on environment, well, then both the Swiss franc and the Japanese yen are going to be sort of sold off. Equally, if they're going to be if in a risk-off environment, you'll find that very often the Swiss franc and Japanese yen will trade very strongly. They may actually cancel each other out, because basically the money flows into those two safe haven currencies. So what you can trade Swiss yen, you just have to be aware of if there is a particular strong risk sentiment that we find ourselves in with the markets. With regards to trading euro Swiss franc, well, as we looked at there, excuse me, is that we have seen the Swiss National Bank peg the Swiss franc against the euro. Okay, the Swiss franc and the euro, they trade very, very closely together, and so what you have to be aware of is part of that is once again about the risk sentiment that we find ourselves in. We have here this year. This is the weekly chart. Remember, I was looking at this a few slides back. Is that we have seen over the last sort of couple of years, having price been up, hitting their 120 level. Well, then what we actually saw was basically price drifting all the way down to that 105, which is when they said they would look to support. And what do you know? We bounced off it, and now we're just meandering really, the euro against the Swiss franc. All right. The thing about euro Swiss franc is that on an intraday basis, it doesn't actually move that much. Okay, very often, and so what you're looking at is you're really looking at seeing where could price drift down to zones where it might be of interest to people, and really for euro against Swiss franc, it's all about at the moment about where it goes to in terms of that 105 level. That's the kind of line in the sand. Which leaves dollar against Swiss franc, which is what we've talked about. What you'll find is you just look at correlations, dollar against Swiss franc and euro against dollar. They can very often be quite closely correlated. So you can watch, you can watch them in particular. Personally, I think, if you're looking at gold and dollar against Swiss franc, okay, you're not actually doing too bad. There are opportunities there for the flows between them. Also, what you've seen is that we have seen that what we've seen is a casely effect of the Comdol currencies, how they actually trade against the Swiss franc itself, and also the pound against the Swiss franc. The pound against the Swiss franc can be quite volatile, okay, but it does actually also have moves. If we just look here, pound against Swiss franc, this is the weekly chart. So, there have been, last year there was sort of kind of great moves down there, okay, and great collapses, great moves, but also intraday volatility as well, because remember, anything that affects, the UK and Brexit and Europe will also have a knock-on impact on the Swiss as well. So it's pound against Swiss franc can be a great thing to trade, but you have to just be aware of some elements of volatility. One of the things we can look at for the moment is the kind of Canadian dollar against the Swiss franc. So I was talking about this to my own clients earlier today about how, at the moment, price is all coiling up. Okay, price is coiling up to sort of get ready to sort of make its next move based upon the results from the US election in a few weeks' time. That's the real key driver. And until that time, what we're seeing is price, kind of markets are starting to become just a little bit quieter because they're becoming, because they're just, people are starting to sit on the sidelines whilst they wait to see what happens next. And with that in mind, well, what we've had is, we've had in terms of strength, okay, and in FX markets, I'm always interested in strength versus weakness. And what we've seen is both, the Swiss franc has been strong, but also the Canadian dollar has now been strong. And when I look at the CAD Swiss franc chart, it's not a particularly exciting chart anyway, generally, but at the moment, I just see that basically price is just coiling up there, okay? Price is just working its way there. If I just zoom. And your price is just basically coiling its way up there, as we're waiting for the next election result to happen. And I think what will happen is that will be a key driver for major investment decisions for investment houses, trading houses. And until they have that certainty of who's going to be in charge for the next 4 years in the White House, everybody's just going to sit on their hands and hold themselves. And that will actually sort of make the Swiss franc very popular at the moment, which it has been. That's why it's this month. It's in my strength weakness matrix. It's the number one. It's the top, and the reason it is because probably money's flowing in there. People are sort of buying gold because they're all just sitting on their hands waiting for the result of the US election, because that will define what the direction we go. Okay. So I hope you found that useful, ladies and gentlemen. I hope it's given you some insight into the Swiss franc. I hope it's given you insight into why the Swiss franc is still maintained to be a safe haven, okay, and how you can just use the Admiral Markets Master Trader 4 platform just to set up a Swiss franc profile, so you can actually have a look at it, keep an eye on it, watch how that Swiss franc is sort of playing out over the next couple of weeks as we run towards the US elections. And then invariably what we'll see after the US elections, we will get an idea of what the market makes of the result of that. If we see the Swiss franc strengthening, well, that might be an idea that the markets overall don't particularly like the US election result. But if the Swiss franc starts to weaken very rapidly, because the people have got a bit of certainty and there's a new sheriff in town and there's a risk-on mentality, well, then Swiss franc will weaken considerably as well. So you can use that as a barometer for how markets will take the election results we see in the next few weeks. As always, I wish you the best of success in your own trading, ladies and gentlemen. Thank you for joining me, and hopefully you'll join me next Monday for the next in the Trading Spotlight webinar series for myself. And as I said, I'll be in Traders Yard all afternoon, so you're very welcome to come and join us there. Thanks very much, everybody, and trade well. Cheers.